Good morning, everyone. Good afternoon or good evening. Thank you for joining us today from various locations across the globe. It's good to have you here for our second webinar of 2025, our first webinar of the day. If you've missed any of our previous webinars, they're all available on our Joseph Mews YouTube channel, where each session focuses on a specific aspect of property investment. So we've got quite a lot of educational content there as well. My name's Andrew Siegel. I'm a managing partner here at Joseph Mews. We go along the line. Johnny will be joining the webinar for this afternoon or this evening. Then we've got Harry, and then he's on the later webinar as well. So we'll have Cameron joining us to present the development in more detail and tell us about the local area, the market, etc., etc. I'm going to give you a little bit of background on us, Joseph Mews. I'm going to talk a little bit about the current UK property market, and then I'm going to look at why we want to be investing in Ascot as an investor in 2025. And as I say, hand you over to Cameron. We'll go through the development and a little bit about the area, etc., in more detail. We found one of the most popular elements of the webinar that we do is the question and answer section. So as we run through the webinar, you should be able to see, bottom of the screen, you've got the little Q&A box there. So type any questions in as we go along, anything to do with property or investment, the market in general, and of course the development. We should answer hopefully a fair few questions as we run through the presentation. But again, we've also got a Q&A session at the end. And as I say, please feel free to pop the questions in and we can cover those. If I go to the next slide, please. Thank you. Just can see we've got quite a lot of newbies and people that haven't attended the webinars before. So just a little bit of background. Our company was founded by Andy Foote, chap on the right of your screen there. He's our chairman. Andy's journey into the property business began after a challenging experience buying off plan in Spain. He bought the property in 1999, still has the property, still working very well for him. But he found the lack of communication, transparency and support to be not good. And this experience prompted him to create a better and more customer-focused approach when he started his own property company back in 2001. So we're ensuring that wherever you're based in the world, you're getting the best care and guidance. We have an office in South Africa, office in UK, office in Dubai. We don't develop in any other countries other than the UK, but it's all about supporting those customers in different time zones, in different regions, to make it an armchair investment. I've got a lot of our clients have never even been to the UK. They just know that the UK is a good place to invest. So as we evolved, we became a major distribution partner for developers in the UK. And we eventually transitioned into what we are today, which is Joseph Mews. We've got fantastic partnerships with various developers and property firms, enables us to access some of the best opportunities available, and that ultimately benefits our investors. Next slide, please. We often get asked about the name, why Joseph Mews. Again, this is a tribute to Andy, or more importantly, his late son, Joseph, who tragically lost his battle with brain tumor at 8 years old. Andy's drive to make a difference reached beyond real estate, and he founded what became the largest brain tumor charity in the world, and that raised tens of millions of pounds, funding huge research program that's greatly improved the outcomes for many affected patients. It's been a real game changer, the research that those funds have made. If I go next slide, please. We've delivered, so marketed, sold and delivered about 3,500 units to date. That's across 36 developments. That's completed, done and dusted. We've got about 4 underway at the moment, with a pipeline of new stock coming. One of the webinars that we talk about is how to build property portfolios, and we help clients do that. And 28% of our clients, where they have the funding, where they're building a portfolio, repeat purchase with us, which is really good. And we've delivered over £500 million worth of developments, of apartments. Next slide, please. Very pleased to sort of partner with industry or world leading developers and property companies. Development today, we're partnering with JLL. They're a global real estate investment management company. They help clients build, manage, and invest in commercial, industrial, retail, residential properties, hotels. And they also provide a lot of investment management services to banks, to retail and institutional investors. So very proud of that partnership. Their revenues to September 24 was $22.5 billion. So very pleased to be working with them on this project. And I think it's a testament to how we work and how we sort of support our clients that they choose to work with us, more importantly. Next slide, please. Part of the reason clients love us and developers love us is because of the way we support our investors. So there's quite a lot of moving parts. You're reserving a property and we're getting you to exchange, typically if it's off plan, then there might be a wait while the development's being built. We've got customer care, we do build updates, we get involved in handover, snagging, lettings, mortgages, completion, tax advice through third parties, after sales. So, as I say, developers love us because they get on and build. We do all the customer care side of things. Our clients love us because we do all the customer care side of things. So that whole sort of end-to-end journey and beyond, it's not just about delivering, it's customer care, customer service, warranty work after delivery. So it's a very much a long-term relationship. If I can have the next slide, please. Thank you. Just a reminder there, any questions, please pop them in the Q&A box and we'll cover those as and when. If I could have the next slide, please. Just wanted to talk about the market. I think it's really important. The UK is the most invested market in the world for overseas investors, and it's for many reasons. It's a mature, secure market. English law is very strong, so investors are very well protected. And for property, it's all about maths, isn't it? It's all about capital appreciation. We're doing this to make money, and it's all about rental yield. So what this chart shows us is on average, every 13 years, property prices have doubled, and that trend is set to continue. As I say, it's all about the math. So you can see it's a nice steady growth from sort of mid 1970s to date. I'll have a look at future predictions as well, because we want this to continue as it has done for many decades. You might say there was a slight blip, as you can see on the chart there, 2007, 2008, when we had the recession. I bought at the top of the market, but it didn't make any difference because, yes, we had a price correction. It was only for a short period of time. I still got those properties, didn't have to sell them. The rental market, paid my mortgage, still got had the tenants for them, zero voids. And those properties, as you can see, certainly mine have doubled. Some have even trebled in value since then. So back in the day, you could probably, you could buy something off plan, flip it and sell it before completion. Those days don't really exist, things like stamp duty and taxes. So we're saying, really, you don't want to buy today and sell tomorrow. It's just kind of a 5-year hold. But if you do need to sell, obviously you can sell and we can help you do that. But we would advise minimum of a 5-year hold. You're getting the best out of the capital appreciation. Rents are going up all the time, as I'm sure we'll know. I'll touch upon that sort of supply and demand dynamic shortly. And I think, we get all the doom and gloom, Liz Truss here in the UK, Donald Trump, COVID, Brexit, wars. Nothing affects the property market. You might get, as we had in the recession, a small correction for a small period of time, but Brexit, COVID, nothing changed. We all need somewhere to live. The UK market is a strong market, as we know, I'm sure. Next slide, please. So this is just some latest press articles. I'm sure you, ladies and gentlemen, will do plenty of research. Just look at property shortage in the UK. We're not building enough homes. Look at all the forecasting. One of the webinars we did earlier on in the month was looking at mortgages for onshore and offshore clients. Mortgage rates looking to be dropping, and the banks' swap rates looking to be dropping. So it's making it cheaper to buy. And in the UK, it's all about, as I mentioned, supply and demand. As an investor, it's kind of a perfect storm. We should be building, on average, 310,000 new homes each year to meet the demand, organic growth, immigration, etc. The best we've ever done for decades is 200,000 a year. Whatever Conservative government promised, whatever Labour said they're doing, they're not performing at the moment. Even if they did, if they built these numbers that we should be building to support the UK market, it wouldn't make any difference, because it would take 50 years for that supply and demand imbalance to catch up. So it's a perfect storm, really, and we see that, and I'm sure we've got investors on board. One question I get asked quite a lot is voids. We never ever have voids. We'll put something on for rent in the morning, we'll rent it in the afternoon. The market is super strong. And as I say, 2035, populations look to set to rise by another 7 million. So perfect storm. Next slide, please. Again, looking at capital appreciation, your JLLs that I mentioned earlier, the big PLCs like the Savills and the Knight Frank. Again, this is from December 24. So again, predicting nice, steady price increase. If you look back at forecasting that we do, that your JLL do, they're always there or thereabouts. Most cases, actually, they're pretty conservative, so we normally outperform the market. Next slide, please. So that was about capital appreciation. This is about tenant demand. As I say, I get asked a lot about voids. Our chairman, I mentioned, he's had 15 units for 25 years in Birmingham through, recessions, Brexit, etc. The worst void he's ever had on any apartment is 2 weeks. And of course, we do a lot of research, and we're supporting all our clients to make sure that we get the properties rented straight away. And this, to be honest, is the easy bit. Depending on what articles you read, for every one house, property, flat, apartment that goes on the market, there's between 17 and 25 people wanting that apartment. So that's driving up the prices because of the supply and demand imbalance. Some of the places we're developing, there's like 50% less property on the market than there was pre-COVID. People are staying longer in rented accommodation. So in the UK, we're becoming a little bit like Europe, which is more of a rental market. We've got a development up north, and we had a lady that bought with us. It was an apartment. She had a 3-bedroom house, and she put it on the market. I think it was September last year. She had 840 inquiries for this one 3-bed house. Phenomenal. So we're seeing high demand, not enough property, as we mentioned before. So as I mentioned, it's perfect storm. Maybe not so good if you're trying to get on the property ladder, but for us as landlords and buy-to-let investors, I've never known the market so strong, and I'm old. I've been around a long time. Back to the next slide, please. Okay, so just to make it a little bit interactive, just a poll question. What's the most important factor for you when investing in UK property? High rental yields, strong capital appreciation, prime location and connectivity, developer reputation and track record. If you just fill in, just tick one of the boxes there for me, and we'll just have a look at what we've got out there audience-wise this afternoon. So single most important factor. So we mentioned earlier, it's about the maths, is it the rental yields, capital appreciation, location and connectivity, or developer reputation and track record. So, okay. So we had 45% perfect saying high rental yields. Thanks for that. 27% saying strong capital appreciation. Because of course, with the going back to the high rental yields, we want to, if you're leveraging, if you're borrowing, if you're mortgaging, we want those high rental yields to cover the mortgage, to give you a profit per month. You're going to get, historically, as we've seen and as we're predicting, you're going to get strong capital appreciation. I've got 18% saying prime location and connectivity. That's important, as we'll see in the next couple of slides, because the prime location and connectivity gives us the high rental yields, because it's where everyone wants to be, and gives us a strong capital appreciation. And I'll touch that in a couple of slides when we look at Ascot. And developer reputation and track record is important. We, via JLL and ourselves independently, deal with the best developers in the world and in the UK. Okay, thank you. If I have the next slide, please. So I've got I want to give an overview about why Ascot, and then Cameron's going to come on and talk about the development in a little bit more detail. This is, as you can see on the screen there, is the actual development. Top part of the screen, north here, you can see the bottom of Ascot Racecourse. It's Royal Ascot. It's a fantastic location. You've got the Ascot High Street to the top. You can just about see the big stands, for the racecourse itself. Again, when we talk about supply and demand, there's nothing really new build in the area because it's either greenbelt or, as you can see, it's already been built on. We got this site, JLL got the site because it's an old hospital derelict, so it's an old brownfield site, so easier to get planning permission. So location's fantastic, which we'll go into a little bit more detail. If I have the next slide, please, Sanjana. We talked about we will talk about rental yields. We talk about property prices and the rental market and historical performance. And we looked at, on average, property prices, 13% year on year. We're very selective with who we work with. It's got to be the right developer that's well funded, etc. But it's also got to be the right location. We turn down a lot of developments because we want areas that are going to give us the best capital appreciation. If we can outperform the market by 1 or 2%, then of course on the prices, on the figures we're talking about here, it makes a big difference. The same with the rental market. So we've got a thriving rental market here, both short term and long term. And Cameron will cover the both short term and long term market, because the long term market is strong. And then we've sort of shied away from central London. Average prices in central London, £600,000, average yield 2 or 3%. So we want to go, and we'll see this is a super area because it's very much Ascot's its own location, as you'll see, but it's also London commuter belt. And we've seen really good 120% price increase over the last 20 years, outperforming the Southeast in general. So as investors, we want to have the cards dealt in our favour. So we want strong capital appreciation, we want the rental market, and we want good performance. We get that from Ascot. Let's have the next slide, please. Thank you. So we've got then rental demand. We've got short-term lets and long-term lets. So as you'll see from the companies that are in and around the area, fantastic corporates. So we've got a lot of demand for the long-term let, but also the short-term lets. These companies have executives and people in that they'll want a short-term let. And with all the research on the short-term lets, we get an average occupancy of 77%, driven by the businesses, the location to the airports, Heathrow, etc. But importantly, we've got 600,000 visitors a year coming to Ascot Racecourse, with little or no hotels in the area, not many serviced accommodation. So again, we're seeing high occupancy rates because of the limited supply. Again, supply and demand, and very high premiums when the race events are on. You see it with Wimbledon or whatever big events, and we've got this number coming, and the rental returns, the short terms, are very high. If I get the next slide, please. Thank you. Again, sort of the jewel in the crown, the icing on the cake is Ascot Racecourse. It's a beautiful site, 179 acres, as I say, 600,000 visitors annually. It's a royal event, been going since 1825. It's well known globally. Racing is broadcast over 200 countries. There's year-round racing. It's not just the one. It's not just the one Gold Cup event, which is the busiest day there, 70,000 visitors that day alone. Because of the area, the location, the facilities, education, it's been designated, it's been voted as one of the top 10 most desirable places to live, not in London, but in the whole of the UK. It is a beautiful part of the world. Next slide, please. Again, there's all these pillars, all these things that we've talked about, and you've got, as we again, Cameron will go into more detail. You've got fantastic corporates in the area, Michelin star restaurants. You've got the tennis, the best golf clubs, arguably, I'm not a golfer, but best golf clubs in the UK. Again, so it's not just the horse racing, it's not just the connectivity, the rail, the road, the airports. It's everything that goes to make up a good investment. Next slide, please. Thank you. Again, you've got Eton nearby. So these are world-renowned schools and colleges. Again, as I said, it's a stunning part of the world, and it may not surprise you to know that in Ascot, average income is 16% above the UK average. So it's got, as I say, all the fundamentals. May I have the next slide, please? I think this is my final slide. I've touched on communications and connectivity. We've got direct trains into London. You're 21 minutes from Heathrow Airport. I think it's the third busiest airport in the world. As you'll see from Cameron in a second, the businesses and everything that's going on in the location. And you've got the busiest motorways nearby. You've got the M3, takes you sort of north and south, M4 east and west, M25 is the orbital around London. Speaking with local agents on the long-term lets, we'll let them out to everybody, I think, and what they think in the area because of the supply and demand dynamics. However, Bracknell's close by, Reading's close by, and London's close by. So you've got that local market, that further afield market, and that London commuter belt market. And as I think Cameron will tell us later, more and more people in the UK are working from home and don't mind being a little bit further afield because these are half-ish central London prices, arguably in a much nicer area, but with very good and quick links, well, all over the UK, but certainly into London for those that need it. Okay, got the next slide for me, please. Thank you. So I'm going to hand you over to Cameron. Cameron's head of international residential for JLL, and he's going to a couple of slides just to talk you through the development, and then we'll come back on for the Q&As at the end. Thank you.
Thanks, Andrew, and thanks for having me. Good morning to you and everyone on the call. So just a brief introduction about myself and JLL. We are a global investment advisory service, and we do a lot of work for Taylor Wimpey, from land acquisition all the way through to disposal. But because they, how we were introduced to this site was, we worked with them. They delivered over 15,000 homes last year, and we worked with them on roughly 200 sites, and they said, for your investment clients and your partners, which site would you be excited about taking out to your investment database? And we looked across, a lot of sites, and this was one that we were really excited about. So next slide, please, and I'll introduce the development. So this is Taylor Wimpey, as I mentioned, and for those who don't know them, they are a blue chip developer in the UK. As I just mentioned, delivered 15,000 properties in 2023 and then did a similar figure last year. They are publicly listed, and they deliver a scheme with everything you'd expect in the new build market: the new homes build certificate, the 10-year warranty, and they give an additional 2-year warranty to their clients themselves. And you know with a developer of this scale that you can be confident reserving off plan that they're going to deliver what they plan to and what they say they're going to deliver in the quality that they're used to. Next slide, please. So this is another drone image of the site. So it's a 13-acre site, which is going to deliver close to, well, it's going to deliver 230 new homes. It's 123 apartments and 107 houses. And, what we were excited about this from the investment perspective that Andrew already touched on was just the supply-demand dynamic in Ascot was where we actually really saw the opportunity from an investment point. It's located in the Green Belt, which I was surprised to learn actually covers 12.8% of England's landmass. So it is a huge area where it is incredibly hard to build. You have to really only reuse brownfield sites in order to build a new home and break ground on new development. You can't touch greenbelt land, and it's incredibly prescriptive about what and where you can build. So Ascot and Windsor are it is the most affluent town outside of London in the UK by a number of multi-millionaires. There are 470 multi-millionaires in Windsor and Ascot alone. It hosts the UK's most expensive postcode down the road in Virginia Water. It had the UK's most expensive street outside of London. So it's a very affluent area and not a lot is being built. And so that's why we're excited to actually have a 13-acre site here with that sort of tenant demographic nearby and frontlining the Ascot race courses you can see there, the short let potential as well, is a real opportunity. So, and just introducing how it's going to be built out, and anyone can also speak to Andrew, who's got really good interactive to use and can talk through the site in more depth. Afterwards is from the north end of the site, you can see there at the top of that image, you've got 4 blocks of apartments, frontline the racecourse. Those are going to be 4 of the 7 total apartment blocks, and the housing is being built from the southwest. So they're building from both ends of the scheme, and completion dates are going to be from the middle of this year all the way through to about March 2027. So investors who want to stagger a payment plan or want something turnkey and deliver a yield, so almost day one now, we've got options within the site that can deliver on both fronts. The payment plan is 10 and 90, so those wanting to push a payment plan further out, it's just a 10% deposit, 90% on completion, so you can benefit from the capital appreciation through the build period as well. Now, starting price, you can see on the screen there, are 425,000 for the 1 beds in the apartment blocks, and then the starting price on the houses, 585,000. So you've got 2 tenures in here. You've got the leasehold, 999-year leasehold for the apartments, and then freehold housing available as well. Now, we go on to the next slide. Yeah, and that shows you in a little bit more depth that master plan that we've got. It is, a very simple, delivery that is going to be, secure fob access to apartment blocks, communal green space and freehold housing with gardens, which keeps your, service charge, your ongoing, holding costs really low as an investor. I do deal with a lot of properties in central London, but even, zones 2, 3, and 4, where, even once you put it, have a concierge or some communal amenity, their service charges are looking at sort of £6, £7, £8 a foot. This, a £2.50 per square foot service charge for the apartments, a small estate charge of £250 a year for the freehold houses, means it's a really low running cost as well. Moving on to the next slide. And that shows you in a little bit more depth just the what we've run through in terms of that housing and apartment mix and those running costs of the apartment, where you can see that full master plan. And what we're going to talk through next is the demographic, because we've run through why Ascot is a desirable place to live, why people want to live there. But obviously a really nice place, close to Windsor Castle and all the green space, and the green belt is lovely. But as an investor, what we really dig into is who's your tenant going to be? What's going to drive your rental yield and the capital appreciation? And so if we go on to the next slide, we can see, who's going to live there? Who are your tenants? So JLL, we do a lot of tenant surveys, representing a lot of leaseholders. We've got a lot of property under management. We do a tenant survey, twice a year to keep an eye on what our occupiers are after, what they're looking for, and what the ONS, Office of National Statistics, have showed, and what we're seeing in our surveys is that there's a big drive from the wealthy middle class and the young professionals sort of moving outside of London into the green belt locations, and that's been a result of changing workforce dynamics. Previously, where you needed to be in the office 5 days a week and maybe wanted to walk to work, and you're doing long hours in the office, the tenants were saying we want to be proximity, walking to work was one of the most important things year after year. Now, with working from home, 1, 2, 3 days a week, we found is 80% of those earning over £550,000 a year, which is classed in the UK as the higher earners. They're working, they're working remotely 80% of the time. So that's what's driven a different set of criteria for this sort of middle class and wealthier young professionals and what they're looking for, and they're moving outside of London. And that's probably what feeds into that figure in Windsor and Maidenhead, that the median average income is 16% higher than the regional average. Is when these higher earners are looking outside of London, looking into commuter belt, looking within an hour of the city, quite often the eyes focus on places like Ascot, because they've got everything else that ticks those boxes. Not just a commute. You've got the Michelin-starred restaurant, you've got the entertainment, you've got Windsor down the road 40 minutes away, you've got the education through from Lambeth School, where the royal kids actually go, William and Kate's kids go to school just 6 minutes from your site, through to Wellington College, Eton College, and then higher education of Royal Holloway University that has 12,000 students. So you've got the educational piece all the way through, but you've got the employment as well, where most people would assume you're reliant on a London tenant, which you're going to have a lot of, but you've got a local tenant as well. And up on screen there, you can see all of the occupiers, almost 600 occupiers within 25 minutes of this site in the business parks. And it's known as sort of Silicon Valley, between Bracknell, Reading, and Heathrow, where a lot of tech businesses are focused. Microsoft's got its UK headquarters. You got Vodafone, Virgin, Microsoft, Oracle, Verizon, Adobe. So you've got a local, really good local employment base for long-term and corporate lets. But there's two elements to this that's driving yields. And if we go on to the next slide, you can see the short let potential of Ascot. So where some of you may be familiar with the issues in certainly central London, but also with a head leasehold, it's quite restrictive of short letting. So whether it's in London, where you can only rent a property for 90 nights of the year, or in other cities where you've got a head lease holder, and they may prohibit any lease, any short lets under a 3-month term, means that there's a lot of property in the UK where you can't short let, or it's not viable to short let. Whereas, with Taylor Wimpey here, we've managed to get that short let clause written out of the head lease for our investors. And so that unlocks that short let potential for Ascot. There are only 3 viable hotels to actually stay in the area, and you've got those 600,000 visitors a year. So it's driving a really strong yield from 1 beds all the way through to the houses on the short let as well. And a lot of owners can operate a dual strategy of short lets around the race meetings, corporate lets for all those headquarters as well, and long lets, whatever suits you at that time. But it means that yields can be driven. And I tried, when Andrew put that poll up earlier on the call, I tried to click myself and it said panelists couldn't answer, but I was exactly the same as many of you, with yields being a key driver, and being able to short let here pushes those yields with the average occupancy up towards 8-9%, based on the average nightly rent that we've modeled with a short let provider. So, something we can go into more depth after the call with Andrew, who knows the provider and is aware of all that modeling. It's a really strong strategy here. You can't get access to in many leasehold properties. You can short let and long let. So you've got a really strong tenant demographic for both. I think if we go on to the next slides, we'll see a little bit on the specification, and we'll just roll through some of these just to give you a flavour of actually what's being delivered. Taylor Wimpey, they're a blue chip developer, as I mentioned. They deliver very good stock. It's going to be everything you would expect from a new build delivery, all white goods included. You've got that NHBC in place to cover the structure in your property. Hardwood flooring throughout, built-in wardrobes, fully fitted bathrooms. And I think that was really, once we rolled through the CGI, really my overview on the site. And I think we were going to go to a Q&A next, Andrew.
That's great. Thanks, Cam. Hopefully it's given a sort of good insight there to the development. And as Cam says, it's great to have the short let option. There aren't many investors. There's a lot of homeowners there. I mean, to be honest, even if there was, how many dwellings in total, Cam?
230.
Yeah, to be honest, even if all 230 were short lets, it would probably work. However, there's a lot of homeowners there.
Yeah.
Some developments we do are very much investor-led. We might have 600 apartments and 599 are investors. And it's fine. Supply and demand, it works well. And we drip feed the units on the market. But here, it's not many houses anyway. And as I say, a lot of people are buying to live rather than buying to rent. That helps. We can help. I've got a question here. Let's see, yeah. Again, so on the subject of short lets and long lets, we can set everything up with you or for you. If you're working and you've got a short let provider and you want to do it yourself, happy days. But we're geared up to help you there with things like furniture packs, because if it's short lets, you need cutlery and tape, TV, coffee machines. There's a bit more upfront cost, but again, more importantly, it's the net which we're interested in, and the sort of the net returns are higher there. So and we can advise either or. With the short lets, you'll have void periods and obviously very busy period. Some people don't like the short lets just because they want to know that they're getting their X% year on year. That's fine. Whatever works. You're not just giving you more choice. You're not backing yourself into a corner. You don't have to decide if you want to go short let or long let. And of course, interestingly, if you get something that's ready a bit further out, we'll have short lets and long lets up and running. So we'll have real live data for investors to work with there. Possibly one for you, Cameron, maybe generic. What would be better? Oh, yeah. What is best for investing? 1 bed, 2 bed, house? Any views on the type of, obviously maybe budget restricted, but any views on the type of unit we should be looking at?
Yeah, I think it as you say, budget plays a big part in that. And because of the undersupply here, actually we've had very even take up between all the unit types. So, quite often, we'll be dealing with a scheme and you'll see one unit type, fly on the market and sell out very quickly, and some being a bit more sticky. And you always, do find that when you're, it's a learning process, getting feedback from the market when you launch a development. But here it's been quite even. I think that's representative of the undersupply and the fact that what you've got is a lot of traditional residential dwellings here that are 3 and 4 bed housing, and not a lot of smaller units, which has meant that they've been really popular. However, you're always going to get a tenant for a 3 or 4 bedroom house in Ascot, and so the yields have been quite stronger than I expected for those unit types. I'd usually say, your 1-2 bedroom flat, it is your, your banker, your really safe bet. But here, that 3 and 4 bedroom house has outperformed.
Yeah, fantastic. Got a question in apartments. What I think this is, I'm not sure if it's typed wrong, but what happens after the 99-year lease?
Yeah.
It's a
So
999-year lease, am I right?
exactly. It's a 999-year lease. Yeah.
And sorry, go on.
Yeah. And, so it is a virtual freehold. There's no ground rent.
There, yeah, no ground rent. There is, the law's changing. The decree was passed. A decree was passed, I want to say May 24, for because some apartments have shorter leases. And the new stuff now, as we've seen here, is 999. If we're around then, there's a law that's been passed, hasn't been enacted yet. Once you get down to maybe 80 years left or whatever, you can extend it. The law will change it for little or no money. At the moment, there's a calculation. I've got some stuff. I've had to pay £3,000 to extend the lease if it's a short lease. Here you find it's 999. By the time you need to renew it, or your great grandchildren will need to renew it, the law will change and it will be just an admin fee because the government want to bring everyone up to be able to extend the lease and give you that virtual freehold. And as we mentioned, something really important is there's no ground rent as well. So yeah, we use the word virtual freehold. Thanks. Another question: service charge. I think you might have covered it, but
yeah,
service charge
so
is low. And
it
again,
is. It's so you've got a charge on both the flats and houses. So if you're an apartment owner, you're going to pay a service charge of £2.50 per square foot per year, alongside an estate charge of £250, which is a flat estate charge. For the housing where you own the freehold, you've got no service charge, but you've got that £250 estate charge. And those costs are just going through the general maintenance for the leasehold flats. Most of that £2.50 is your building insurance, and then just running of all the common parts, making sure that there's all the preventative maintenance on the roof and external. And then for the houses, that estate charge is just running the roads and those communal areas.
Yeah, I suppose gardening, street lighting, exactly. That kind of thing. So it's only £200 a year, so that's good. Okay. I've got another question here. Do foreign investors become British taxpayers? Yeah. Unfortunately. Now, if there's things we can do or things you can do, potentially setting up a limited company. However, if you're a foreign investor and you've got no other income in the UK, so everyone's circumstances, of course, are slightly differently. You can have your first £12,500 tax-free. After that, it's 20%. Again, if you're a high rate taxpayer, or if you're UK based and hitting that threshold for your tax-free income, then again, maybe it's worth, and we can help. We've got specialist accountants that can look at setting up an unlimited company so you can claim interest back, furnishings, wear and tear, service charge. So again, we'll have a little box to tick if you want to follow up, and click the other box. And again, we'll contact you. And if you want to put in touch with mortgage provider, for example, to maybe pre-approve a mortgage before you commit and find out about, from a tax point of view, we've got specialists that are will look if you're buying in your own name, and companies that will look if you're buying in a limited company structure, and you can just work out what's going to be better for you depending on your sort of personal circumstances. So thanks for the questions. I think we covered service charge. Let's have a look, see if there's anything else in that's just relevant for this. No, that's too bad. Can I pre-qualify for a mortgage? Yeah, you can do that. Any additional costs? So I suppose to budget for, we can have sort of cash flow summaries. So we can look at the returns on the short lets, the returns on the long lets. We can have a look at the costs involved, furniture packs, stamp duty for UK investors, stamp duty for overseas investors. So we can share all that information to give you, I guess, a sort of a true net figure. And I think that's about it on the questions, unless anyone has anything else. Thanks for that. If I could have the next slide, please. So anyone reserving within the next week or so, we're contributing £1,000 towards the legal fees. So as long as you register and we're talking to you, and we can we have solicitors that we work with, and we can save £1,000 off the fees. And then I think my final slide is next steps, which is just click on me and the box here. If you'd like a free property consultation with myself or one of our team, global, depending on where you are in the world, just tick the box if you want to talk about the Ascot investment opportunity, mortgage options, the UK property market in general, or if you put other, if it's maybe tax or mortgages, we'll be in touch. Follow that up, and we can have a free consultation, next steps, etc., and yeah, run through anything one-to-one, team, Zooms, call, whatever works in more detail. So thanks for that. I'd like to thank Sanjana for hosting the slides. Cameron, thanks for that. Really good insight into the development in the area. And as I say, fill in the form, and we'll be in touch, follow up, and look forward to working with you throughout the year. Thanks very much. Cheers, guys. Bye-bye.
Take care.